going through automatics and polarity. I put automatic / polarity here for the writing, which is meaning automatic trades we should typically be taking with higher amounts of leverage, bigger levels, more important moments, kind of the levels and the points in the chart that happen once every 2 weeks or once a week, just your higher amounts, like your higher type of levels. And we'll get into that a little bit later. We're just kind of defining automatics, and then we have it listed as / polarity because typically your automatic trades are going to be at moments of polarity. So automatics / polarity becomes that, you find your polarity point, that becomes an automatic. It's typically the tops and bottoms of the ranges. So again, your automatics here are going to be your very final points in a trade. Like this level here was a 4-hour level, I believe I have it marked as. Let's go take a look real quick. It was a 4-hour reverse, and the reason it's such a good level is because obviously it's the dailies hit here. You've got a trail of ladder points, so 4-hour reverse would have been a great level to play because it can't really break above this because that's a ladder point. So you just start this first top of this range, and that's the point of automatics / polarity. We don't call them automatic / polarity. Actually, I have that listed and labeled as polarity here, just for example's sake. But we would just typically call these automatics. We wouldn't say automatic / polarity. Automatics / polarity. The / polarity is just, again, to define that that's where we look for these automatic trades is these moments of polarity. So let's just go back to the 4-hour here and take a look at why we would use that, because we do need to define what those automatics stand for and what they are. And then you're looking for your highest time frame levels. Like another automatic here, if we wanted to find one, would be, is that a, yeah, so this is an origin. So this would be another one that could be an automatic because it can't, your ladder points are, it's the exact same thing as the currents. You've got this, you've got this, you've got this. And then so this level right here becomes the next, pretty straightforward ladder point. If you break above that, you've kind of got one more final. You've got this to this, and then you can hit this as a reverse as well. And, you've got your trend work like this, which I'm sure is, far past and long gone at this point, but anyways, not really the important part of the move. That's, long gone, not anything important, but would have been probably helpful in the moment. And so you're left with your spots where you would look for an automatic trade, right? So if you can't, you go to a 4-hour and you're saying you've got a ladder point here, you've got a ladder point here, you've got one here. Again, it just has to stay under that 4-hour level. So that becomes an automatic trade because it is the top of the range. And that's why we put / polarity, because it is the only level left on the chart. You might be able to convince that you could have this and this, but at that point, you're measuring percentages here. Like if you go here and you're measuring percentages, you're talking about an extra 20% and an extra 30%. This could actually cover the entire spread on 100x leverage. So if you were saying like, okay, which is the automatic level? Yeah, you could have went to the origin for sure. You could have even deep dove the origin at like 32% or something like that. You really can't get above this. Or you could have, even in a worst case scenario, you could have wicked this, gone straight to here and then pull back, making this the break of the move, therefore having possibly an origin in the future, or at a minimum, if it's not going to be an origin, at least a trend. But with these 3 levels, you're finding an automatic. This level here covers the spread of all 3 levels. And it's actually the 4-hour reverse, which makes it a pretty strong candidate for a level. And even if the 4-hour reverse didn't hold, you wouldn't have much more behind it that would liquidate your position. So you would be in this position no matter what. So then when you actually go to the front of the chart here, you can see why this makes a perfect automatic level, because it's, you're not liquidated on any of the 3 levels. So you can actually label any one of these the automatics, which you would think it would be hit. And then there'd be another automatic up here, right? So these should be automatic trades you take. Spots where you can use a higher amount of capital because these moments aren't going to hit very often. It's going to take a long time for them to hit, right? Like if you go back and you look at some of the other forms of polarity in here, and I'm not quite sure what this one hits. We can just mark another 4-hour level here, and that's perfectly fine. You've got a 4-hour level, and that's fine. That hits. So this is happening on July 21st. It looks like this is happening July 21st. This happens on the 23rd. So this was actually pretty quick, this one, but it's still 2 days waiting for one trade. So it's still a considerable amount of time, given that if you're looking for one trade over a 48-hour span, and then other than that, the next time we get to the next automatic level, it would have been this hourly origin right here. So this hourly origin was something that we talked about before, and it was honestly, it's like such an easy trade, such a great level. And again, 41%, it goes over it. But again, you're not out of your trade, and this becomes an automatic. And as long as it ladders from this to this, you've got confirmation that this thing is going to continue moving down or retest somewhere. So if you wanted to say even this could have been an automatic level, it would have been on a smaller scale because you're not defining it from a range and from polarity on the outset way out here. It's not defined on this larger outset, so it's not going to have as big a reaction. However, it's still a pretty decent trade, right? Like you got from here down into this range, you've already got 5%. You've got like a 3.5% trade here within how many hours? You've got 1, 2, even just say 2 hours, you could have scalped out 2.5%. Like that's an amazing result for 2 hours. If you would have waited for half a day, you're at 3.5%, and if you would have waited a full day, you're at in and around 4%, and if you just kept holding, you go to 5%. So you can see where the automatic trades on the larger ranges, the first thing to know about them is they're going to give you a larger percent return. So if we start defining expectations on trades, automatic levels, your expectation should always be bigger. So stuff like this, this being the absolute final level in the trade that would define this still holding its range, you would expect it to be significantly larger returns than this 4 hour. So I would expect something along the lines of you would do something like hit this level, pull back, and maybe break down to this here if you're going to support the move up, staying within the confines of kind of this range here. It's just extending the range a little bit. And we'll talk about range extending in a future session. But range extending is another thing that we look at when we're defining ranges. But that's fine. You can extend this range down to here. And then you have, quite a large result. I'm assuming this is around 14%. Okay, it's not that much. It's like 11%. Yeah, it's like 11%. So that's fine, 11%. But that's quite a big difference than 5%. And that's, defined by the fact that it is the final level. It is a higher time frame, and there is nothing left. This automatic rate here, this still has one more level behind it. So it's a good spot to continue a ladder. Like what this is communicating to you is that you've got, these 4 hour ladder points coming from the backside of this range. Like you've got, zoom out a little bit here. You've got this laddering to here, now laddering to out here. So it's still respecting this range. So if you wanted to say that it would encompass all of this, right? Like your current part of the move would be like this. So it would be from here all the way out to like the ladder point that's set from out there, right? So it kind of covers the entirety of the range. It covers everything from the ladder point back to here, right? Because it is covering this right here as well. So your coverage is like this. If you get to the higher level, your coverage, it cuts off all those 4 hour levels. It goes to here, and you'd only be using daily information. Right now, we're using 4 hour levels. Before that breaks, and we won't talk about extended ranges and things like that, but we will get into more advanced range work. You have to, excuse me, you have to step through these levels. Like you would have an hourly expansion to down here, right? You would expand your reach to here, which is why you do get a stop off here. Like there's certain ranges in a move that will get attacked. For example, this here attacks what would have been hourlies in here. This here attacks what would have been 4 hours in here. This stuff out here, oh, sorry, I mismarked that. There's a part of this that would attack this stuff here, and then getting up to this level attacks that stuff there. And then you're moving up in time frames to break the move, because that's the way the decycling would work, right? From a higher time frame down, if you were to chart this, you would say, okay, you have to break your daily before you do that. You have to break your 4 before you do that. You have to break your 1. Kind of gets into the realm of cycling a move in a more advanced light, so that you can see exactly which range you're going to attack and when you're going to attack it and why. So again, in future lessons, we'll get into extending ranges and then the way we cycle through range extension like that. But for now, anyways, for this lesson, we've got automatic levels at 4 hour time frames back from here. And they are going to stop there because the hourlies broke here and the daily's not ready to break yet. And that's going to be when your daily goes there, it's going to X off all those 4 hour time frames. So automatics become a matter of finding polarity in a move and defining where that polarity can exist. So again, you have the 4 hour level here gets hit. We're going to expand this chart a little bit so we can get a little more clarity and take that out. So this was an automatic trade. And so for these automatic trades, you always want to scale up, right? Like if you think of it in terms of, you have an automatic trade and you have decision trades, and we'll get into decisions next, which aren't the automatic trades. Your automatic trades are going to be longer term trades. You're not typically taking automatics as scalps, although you can if you have a nasty level that gets hit and you've already predefined, hey, this is my exit point right here. and you get this move up, and within 15 minutes you hit your level and you hit your take profit. Sure, it's a scalp, but it's going to be less frequent than not, and you're going to be getting into more position trades and swing trades with automatics because they're just not meant to have a lot of comparative analysis to them. They're more of games of patience and mental analysis. They're more of games of, okay, we're going to hit this level. We don't have to do a ton of comparative analysis. We still do our CA. We still monitor the trade. And if you were to go back into this moment, I'm sure you still have a queue of, 5-minute levels that you're looking at. And yeah, exactly. You have, a level that gets hit, and then you have, another hold level here, which actually never gets hit. And then, you could probably even go down to the 1-minute timeframes here and find, information where this stuff right here as the first level, right? You hit that. This is your reverse level. You go after it, you hit it, you pull back, and that's fine. You have comparative analysis parts of the chart here. So maybe you took one scalp here. Like if you wanted to say this automatic trade and take it a step further, take your automatic trade here, take re-entry as your position here on that first 1 minute, right? Or, you could have been here, but then it breaks up on over. And that's kind of a risk you take if you're going to scalp this thing. But so then it's fine anyways. You make a quick 1.3% within 10 minutes, and then you re-enter here, out here. But you kind of lose out on a lot of your trade there because you could have made 2.7 had you just waited. Well, what time was this? 9:50. What is this? 9:52 to 10:23. So, I mean, you're talking about what, 26, 27, 30. Wait, what time was it? 9:52 to 10:24. So you've got 32 minutes. 32 minutes, you make 2.5%. Like that's a very good result in return. So if you had done that, that would have been great, as long as your position trade, you're entering it to take that longer trade down, right? Because then you have another 2 or 3% you can make based on the lower levels and so forth. So like, just to communicate, automatics, they are more higher percentage trades with lower risk, but they happen a lot less often. So when you're doing them, you can use a higher amount of money with a smaller amount of leverage if you plan to turn it into that, because you have to make that decision too. You hit your automatic, you're going to have a big reaction. Are you taking scalp profits to re-enter the trade? If you are, you should be using high leverage with whatever amount you decide. If you're going to be holding this thing for a little bit of a longer time frame, I think at that point you just take a lower leverage with a higher amount of money, which is nice because it allows you to kind of say like, okay, well, you have your initial knife catch. You're not willing to wait for, like, you enter this at 100x here. You're going to sit there and you're going to take your 2% or your 1.5%. And then, upon that re-entry here, that's when you're taking your larger, your larger amounts of percentages and profits. And then you can scale that accordingly, because then again, it just, by that time the move is defined, you've got your level that you're going to hit, your next automatic, and it just goes from rejection to automatic. And that's a pretty quick trade too. And that's 5% or something like that. I believe this was even an hourly at that point. So even despite this 1 minute level, actually, you could just take that off. And this was actually an hourly. And then this timestamp 22:45, 5% if you're holding it throughout the course of half of a day or a third of a day. And, it's a solid 5%. And that's the power of these automatic levels, is that they do that. They do have huge returns. Not like scalp trades. So automatics is all about finding that polarity in the moment, that final part of the move, and you're waiting for them. Like another good example of an automatic level would be a trend. That's a trend that's been sitting there forever. Or, you go to a daily time frame here and just mark out some trail of a move. Like this hasn't been hit. This stuff here looks like it laddered the move. So it looks like there was some kind of polarity here. Laddered the move, some type of polarity there, laddered the move. So then you would look at here, that bounce the move. What else do you have? Do you have like a weekly or something in here? You don't. You do have a weekly here. Define it down into a combo level. You've got that. You've got backside here. Just keep going down time frames. You have 4-hour level right here. Backside little valley right here. This is a great example of an automatic level. And then even beyond that, maximizing it, or maxing out the ladder point where you have ladder. Your next ladder is going to be one of these two, coordinating it with trends. It gives you your next automatic trade. And that should be a trade that you sit in. Like this should be a trade. It's going to take a while to hit, right? Like you might be waiting for another week or two, because that's quite a bit of a move down. But if you wait to that point and you hit that level, you're not entering and exiting that trade with a scalp mentality, unless you're hitting that automatic level. You're scalping like 100x on a quick trade. You want to make 2 or 3% with the intention of re-entering, then that's fine. And you don't even have to re-enter. I say that's fine in terms of, oh, as long as you're getting back into the trade, that's fine, scalp it. You don't have to get back into the trade to justify the scalp. If it's just a percentage game for you, that's perfectly fine too. But I would say that these levels, these automatics, they do create really nice opportunities for re-entry, because you're going to bounce down here, you're going to hold the move, you're going to create some little thing like this, you're going to go like this and this and this, and you're going to hold this level until you have an origin here, and you're going to have like a trend that goes like this. And this is like a great re-entry scenario, because obviously it's holding the move, it's going to break that, it's going to break that, and that's where you should be in a position trade. So there's going to be a lot of situations where you have automatics, and you can even do another thing, which is entering them on low leverage. Take your first trade and then do high leverage rebuys on, when you have a trend or something and you have a hold level that's been holding, and you can take that rebuy there for your larger trade, right? So you can, play with automatics and polarity in terms of the decisions you make, but the core principle behind them is that they are going to take a lot longer to hit. They're very infrequent. They happen typically once every 7 days, or, these automatic levels, they don't get hit. The decision levels, which is this, or decisions, I don't want to call them decision levels, but automatics and decisions, you can have 10 or 20 of these a day. You'll never have more than 1 or 2 automatics a day. Never. It would be even rare for you to have 2 automatics a day. Spots where it should automatically be a trade, because it's always going to hold it up, because it's going to hit the very cusp of the range, the polarity of the range, and then the odd time it's going to blow through it. But it's extremely rare. I wouldn't say it's extremely rare. I would say it happens, but it's not frequent. Like, I don't know, if you just mark this, I think that would be a misidentification of marking maybe an automatic level. I think that would just be, or even maybe back here, you have some type of polarity that starts from here. Looks like this ladder to there. So you'd have some type of hold level like in and around here. I don't know, it doesn't matter. We can just mark anything, and you can see like it just goes right through it, and there's not really an automatic trade there, but that could just simply be a misunderstanding of what is actually an automatic level. That might not be an automatic level, despite that it may look like range polarity, because it's the first part. It depends on a lot of things as well, like a lot of other contexts that we're not going to go over in this lesson, which I think should be common sense. We don't ever just take one level and mark it out and just walk away. We always have to have that context. So that's, automatics covers those spots where you would have automatic levels. And they're more of a mental analysis game. Like if you were to say decision levels or decision points or just decisions, I would just say decision range, decisions or decision points or decision levels. I just call them automatics and decisions. Decisions, you're going to have a ton of these all day long, and they're going to be short trades, scalp trades, unless there's a really good reason to get into one. And, they're going to be your 10 or 20 trades a day. There's a lot of analysis you're doing with decision levels, as opposed to automatics and polarity. You're marking this level, and you've been waiting since June. Since June of 2022. It's like we're a year later, right? Like they're not going to happen very often. And they're more mental analysis, because number one, you have to wait for them, and you have to manage your things like your patience, your tilt. You can't be entering this trade to exit it right away. You can't have an automatic that's existed for a year long over from back here, back in 2022. Fast forward a year, and you have this level that you've been waiting for, and all of a sudden you just get, mental analysis wise, you just get, you get impatient and you want to exit the trade because you've locked up guaranteed profits, and it's really sick. It's got instant 3%. That's fine for a scalp as long as you get back into it, because realize that trade happened, that level was there for a year. So it's more of a mental analysis game, where you're sitting there and you're saying, look, I've got these levels that are getting hit. I have to be patient for them. I have to wait for them. And then when they happen, I have to also be able to put emotion aside and not look at, oh my God, I've made 2% already. Let's go. Lock up my profits. You can still do that, but you're going to be shortcutting yourself. You can still lock up those profits, but again, with the intent to re-enter. And if you miss the re-entry, it's like, you just missed a huge moment in the charts, right? So like automatics are like that. They're moments you wait for. They're more mental analysis. The technical analysis is very easy. You marked this level a year ago, and now you've finally hit it, right? Just to kind of simplify the context of mental analysis. That's all you've been doing. You marked the level and you waited for it, and it's as simple as that. So that's a really good deep dive into automatics, and why we use them, how we use them, and where they exist. They're polarity points that should be automatic trades. They're not these types of trades where you go and you do a ton of analysis on them, although you do an initial set of analysis. It's more of a waiting game, right? So those happen, and they're going to happen very infrequently. So you have to identify them as large money makers, which means you should be using a larger amount of capital on them by default. You can remove or reduce some of your leverage to offset some of that negative feelings of risk, or some of those anxious feelings, or feelings where you may be not quite sure if the level's going to hold, you can lower your leverage as a safeguard. That's fine. I would rather see somebody do 20x trade on an automatic level with a larger amount of money, as long as they can hone their mental analysis side and not get paralyzed by emotions, not get FOMO on missing profits, not get too panicked or jump that timeline or skip through that timeline too fast. You have to be able to do a little bit of just self-auditing on that. So that's a really important one for automatics, is just your mental analysis side of things. And that covers automatics. Like, they're, again, trades that automatically are there because we define them by ranges. Now, I do want to also talk quickly about how we define automatics. We use all of our tools in technical analysis to define automatics. We use reverse levels, we use origin levels, we use ladder points, we use untested hold levels, we're using internal trends, range trends. It's all about finding that polarity. So that's an important part of your TA journey with automatics, is making sure you have the right level, the right polarity, refine down to a spot where there's nothing left. And it is actually the final level in a move. And remember, trends are levels and levels are levels. Everything is a level on the chart. So whether it be a trend that adapts from a reach point and cycles, or whether it be and there's another interesting thing, trends are levels, but they're levels that can move, right? So they're dynamic in nature, which we'll get to in a future lesson. Range expansions and dynamic trends. We'll get to that stuff in the future. But anyways, the automatics are they can be anything. They can be any type of TA that you have. It's more about defining this half of it. So like, it's more about defining the half that is polarity on this. So like, when you are looking for it, it's just about defining the polarity. So automatics are defined by polarity, and they become the final moments. And so that's for automatics. Less TA, more MA. More about boosting your account as well. Like, another big part of automatics is that they're the types of trades that if you have, let's say, a $10,000 account, you can double or triple it with the right trade. As to where decisions with these smaller trades, you can't double or triple your account with one trade. You can do really well and you can compound a ton of percentages. If you take 20 trades and 18 of them are good, of course, you're going to be compounding your account. But automatics can do that same result with one trade, right? Instead of having 18 right trades. So again, they just, for the nature of how they exist and why they exist, this becomes something where we call them automatics because they're automatic trades. It's one trade that happens and that's it. So you're waiting patiently for them. The other half of that is decisions. So decisions are the trades that happen outside of automatics. So you can almost even think of this as legacy, right? And then global, and then inside of that would be local. So you can almost think of them in this type of way that funnels down. Like, decisions are less profits than automatics. They also exist in shorter intervals. So they exist as smaller trades with smaller percentages that happen more frequently. So even like how we do legacy, global, local, it's kind of the same type of decision tree or the same type of funneling down. It's instead of big profits, it's smaller profits. Like the profits are diminished. The amount of longevity you go into these trades are diminished. The quality of trade diminishes, and it starts to veer towards more of a side of quantity. So your decisions are going to be all of those smaller trades that happen frequently on a normal basis. So we'll walk through some of that because automatics, I feel like we did a good walkthrough. Let's walk through some of the decisions, and the decisions exist inside of those automatic confines. So if you're bound to this range by this polarity point here and this down here, your decisions, they happen between these two levels. Like, your decisions happen between here, almost as if it's just a range in itself. So you can almost think of it as a range. I mean, you might as well. It's the same thing, but you can just think of it as a range. And, without getting again into range expansion, that's fine. Decisions exist there. And so we can kind of walk through a few of those points. And if you've defined this move based on, polarity here, polarity down here, this was a level from before. No, this was the point of this one here. So I'll re-go over this. You have a ladder point here. So we say we want to stay above this. So you want to ladder the move somewhere above that. So you're just kind of at like this point here where you do have levels. And if you're finding polarity, you can mark everything from origins. So let's go find an origin here. Let's go find something in this move that we would feel comfortable saying, like, this would be a level that could get hit. So you've got this here, no hard closes. So this would be one here. Let's look at the 15 as well. Maybe we can find something even further back. So you've got this here as a 15. Let's change these colors too. just so we have that clarity. You've got this as a 15. There's looks like no hard close, which would also be a ladder point here. This one is hard close down there. So you got a 15 there. Let's go back, mark that hourly. You have got your hourly rate here. Yeah, there's no hard close there. And then you've got, so right now what I'm doing is I'm defining the levels that could be hit on this chart, right? You've got polarity there, and then you've got your hold level here, which is fine. It's held the move. You can staircase this, ladder it, move up, reverse those. We already can see that it's testing below, so I don't really think there's a point for marking these reverse levels and all these other things. But then anyways, what would happen here is, you know, your automatics in this case on the bottom side, it was this level, because you're just saying you need to stay above this, not break the move. And ladder it somewhere. So like if the bottom of this move, the price is 506, you could even maybe go a little lower. You could even maybe go, I think we had 585 was what we marked. And then, you know, if you're measuring from the bottom of this to that, you're 26% away. This becomes a nice automatic level, which is great. So when your automatics are defined, and then this is an hourly level up here, break level, that's kind of the two automatics inside of the move. They are good trades, but they do more so define, like, this is an automatic trade, this is an automatic trade, because they are defining the scope of the trade. So anything inside of that would be your basis. Like anything inside of this to this would start to define decisions, and where you're not looking to have, these would be the automatic trades. Everything above those would be decision trades. So like what I would like to see first here is these automatics get hit. In our example, and there it is. It goes from one to the next. And then it's just like, it's almost in a way common sense, because it's like, this breaks the move up, so it has to reject. And this is going to hold the move up, so it almost has to establish these. So then it can do stuff like this and say, okay, you've got a trend here. You've got this here is going to be, I don't even think that's a ladder point. So you've got that there. You've got this here. You can delete those. And then you can start working your architecture off this. Then you can start going and saying like, okay, you've got an hourly level here. Let's even mark that down further. You've got an hourly level here. What about the top side? Okay, so there you've got your hourly here. So now you're getting into this just decision levels. And if you have two hourlies, if this one gets hit, you can expect it to go down to this one here. Or you could say like you're going to go after a break of the move or something else. But these just become very simple decision points in the charts. You know, you have a trade here that you could take without going into any time, other further time frame. I'm just going to mark those. I'm going to take, what's this 4 hour here? I'm going to take that off. That I don't really think we need. Is there any other reverses? Like we could use this. I don't want to get into reverses here. You could use this here. So you could be down here. So we can mark that one as well. Actually, said I didn't want to get into reverses, but that's going to ladder this. And this is the break of the move. So we're going to ladder this and just see what the charts look like before we start making some of these decisions. So this is the break of the move. This is a ladder point. That's a, sorry, break, reverse, and then ladder, which gives us a lot of information, because now we know which kind of target's going to be hit based on up here. And we're just going to use 1 hour time frames for this. You go down, you spike straight up to this hourly. This hourly is already hit. So we're not going to expect this to hit again. If anything, we're going to break to the higher level. So I would not use this. Oh, this is a 4 hour, sorry. So is that. I need to change that. 4 hour, 4 hour. And just because we want to see if this one gets hit, that's fine. I think it's important to have both levels, and these become kind of your decision points. And this is where you can take 10 trades a day, 15 trades a day, 20 trades a day. You know, you mark the backside of this, that would have been an easy trade. A little bit of hindsight. So let's keep moving through here and try to find the next levels for us in our scenario. So then you have this. I don't think it really makes sense to take the extra little piece of the trade there. I think at this point, you're just going to take this. And let's just maybe double check, make sure there's no crazy 5-minute level way up there. And there is actually. So maybe it's a little better here to take a 5-minute level. And the reason I'm going to make that decision is because it looks like that's not tested, but I'm gonna assume that we're just gonna go here next. So 3107, 41. What else do you have? You have that there, trend there. I would just go, I think I would go all the way to 41 here. I think I would go, yeah, I would go all the way to 41 to take my trade. I'm gonna move up in time frames here. It's 5-minute time frames, not gonna cut it for me right now. Okay, let's see what happens here. goes back up. And we know this actually hit back up here, which is fine. We knew that from our earlier example in the charts. And so like you have your trade here, and this becomes more of a decision point because you've got your levels here, right? Like you've got your 5 minute here. This point, I wouldn't want to use this as a 5 minute level. I think that's a little too close, just for my own comfort, not for any reason that I would say that, but rather I would like to see this thing ladder off of this and kind of continue that on. So you've got your 15, your hour, your hourly, your 15, and this one was a 5. So let's mark that as a 5. You've got your 15, your hourly, your 15, and your 5. So then you start breaking up, you hit your 15 here. So obviously the hourly is invalidated. You hit your 15, you hit your 5, it pulls back. This is actually quite a bit of a push past that 15. It's actually quite a bit of a push past that 15. So let's go to a bigger time frame here, or sorry, from that 5. So again, we know this went to the hourly, but this becomes more of a decision level. So if you were in this moment here, I'm just going to cut back to right here. This becomes more of that decision level moment where you're sitting here, you've got this 5 minute chart, and this is where you have to do like your kind of hyper analysis, and you're taking tons of trades all day long at these levels. Like you could have taken, even if you would have taken this trade at this level, it's still fine. This is going to be 30%. It's not a lot. It's not great, but it's still there. It's still 30% in the trade, right? So that's where you have all your decision moments in the charts, all your smaller levels, your kind of anything that would be not an automatic, but a decision. You have exactly that. You're constantly doing comparative analysis. It never hits the break of the move right there, which is a really important piece of information. It does hard close on this time frame, refuses to hit the break, creates an internal trend, right? And that carries that move going up, never breaking this trend, just going up to your next level. So that would be a point where you're in this trade. These are going to be scalp trades constantly, unless you have a reason to turn this into an actual position trade. Like decisions, that's perfectly fine if a decision trade turns into a longer term trade. But really the intent of all your decision trades, all of these moments inside of it that aren't automatics, should very simply be like you've got a trend here, right? You're trying to develop the move down. You're going to be using higher time frames here. Let's go see what we can find. You've got this. Do we have this on a 5? Do we have any trend work here? Nope. You've just got something like this, which is fine. Just go validate it on other time frames. Make sure there's no hard closes. 1 minute is what we're kind of worried about here. There's no hard closes. That's your trend. This is a level you have to hit. If you've taken this trade, you would have had to front run it a bit, which I think is reasonable. If it's at 53 and you front run to like 48 or something, I think that's reasonable to say that this is a pretty easy trade to be in. I front running it by a few dollars. The whole point here is that now you'd want to say, all right, we can't ladder this level. And if we do, the next thing we have to do is break that move down. So if we are going to bounce this, and like if we're going to hit this level here and this is going to hold, you either have the choice to get out of the trade right there and get re-entry on the inverse, like this would be your re-entry. So you have the choice of this, which is enter here, limit out there. You've got an easy 25%. It's a 2 or 3 minute trade. Fine. That's exactly how these decision trades should go. And if you haven't decided to exit here, this is holding up the move. So at this point, you should be saying, uh-oh, like if we break the trend, we're about to move up. If this doesn't hold, it has to hit this level to break the move, or at least create the point that would break it down. So then if you're still in this trade, let's say you didn't exit this trade. I think this is a fine exit. I think 25% here is fine, minus fees. Fees are getting pretty cheap across the industry. So you'd be at like, yeah, if you entered at like 48 and you went to right here, yeah, 25%. So you're left with 22% on a 2 or 3 minute trade. Pretty decent. Do that a bunch of times a day. You make yourself 200, 300, 400% if you're really good, right? So this here now has the trend. It's not breaking. Okay, good. We're still in the trade. Next step of this move is we have to hit the break level so that we can create some type of breakdown. We're either going to go straight through it. So a couple options here. You either go straight through it and you don't have anything to worry about. You're still in the trade. If you entered here, exited here, and re-entered right here, this is perfectly fine. Or whether you entered here and you're still holding this move, the things you have to look for are, number 1, does it ladder this? If that's a yes, get out of the trade. Number 2, does it hit this and hold? Yes, get out of the trade. Number 3, does it fail to hit the break level? Yes, get out of the trade. Those are the get out of your trade marks, which is perfectly reasonable because it's very straightforward. You have your break level here. That has to hit to break the move down. Under any other circumstance, if that can't happen, you're moving up. And even just for the simple fact that every other outcome equals this ladders, you can move straight down and it says this doesn't ladder, this doesn't hit to break, that's fine. You could and that's moving down. You could hit this level here. You're going to break the move. Even if you come back up, that's, you know, going to end up eventually breaking the move. That's fine because you're going to go up and you're going to come here and you're going to lose trend. And once you lose that trend, you've lost the move. That's fine. And there's all these scenarios that break, but at a minimum, you have to hit this. So if you cannot reach that, every other breakdown scenario is invalidated anyways. So let's just, you know, you go here, you ladder the move, and it's like, oh, okay, good. We're about to break the move. So we've made a trend. Okay, cool. So we've made a hold level. Shit, not looking good. Don't get over that hold level, please. You get over the hold level. Okay, so like if you're still in this trade, really at this point, you should be exiting. You should be looking for some type of exit somewhere. And then, you know, even with that said, breaking over top of this would be disastrous. You would just move straight up, right? So this is where you're just doing your hyper analysis, comparative analysis constantly all the time. And you're sitting here in this trade and you've only gone 907 to 922. It's only been 15 minutes and you've done a ton of analysis in here. So this is very indicative and very much how these decision trades work. You have 15 minutes where you've had to go do a ton of TA. There's not a lot of MA that has to happen here. You're basing this off of a very, unlike automatic trades where you have to flex patience, you have to think about re-entries, you have to think about how much profits am I taking. There's a whole bunch of mind stuff you're working on in automatics. And this, you're simply just doing TA out the wazoo. You have just sat here and just done TA. What breaks a move? What holds a move up? Where is it going to break? Where do I get out? It's just a constant onslaught of TA. So you hit your level. Oh no, this is looking disastrous. Okay, trend is kind of still holding. You have now a break level over top of trend. Like you get over this. This move is gone. Like this should be red flags to get out of the trade. The only thing you could do is hold to see if you break this trend. But at this point, you're already creating a hold level. If you're in from here, this has to be a trigger out of the trade. Like it absolutely must be. You're starting to get to that level, create architecture over top of it, back testing this internal trend. And like, yeah, well, like, what did you expect, right? You broke over the trend. You broke over the last hold level. You're hard closing. You're creating hold levels lower and lower. You got over this hold level. There's nothing left. You've confirmed the break of the trend and you've set your hold level up for the future. Of course, this thing's just going to move up like one candle, like get out, right? So this is, you know, exactly how it works. And then your next level's hit. And then the same thing happens. You have a perfect entry here. You pull back instantly. What will break this move? So you've already got part of your range defined here, right? Moving past that, you would be something like this. And we can go to like a 5-minute time frame maybe and see if we can. No, okay, so there's nothing on the 5, so we don't even need to worry about the 5. The 3, we don't have anything at all on the 3 either. Literally the only thing we have is like a 1-minute chart here. And so you could do this. Oh, that's really aggressive. I would just put it to here and I would just snap this to here because we don't have anything else to work with. Not really going to be an important factor too much. But if you have, again, same thing. This holds. This stuff back here holds. You back test this green level. These are all points of the move that you would have to, like the only conceivable way I see that you break this move is by getting underneath this hold level, which means you're getting back to something like this. And you're probably saying on a larger time frame, you've got a hold level here and a 5-minute break here. So I'm assuming that you've got a 5-minute break right here. Let's go check. I don't think you have a 15. No, 15 is too big. I'm assuming you have a little pullback. Oh, come on, Trading View. You have a 5. Yep, exactly. You have this here, which has to hit. So this is what's going to break the move. So you've got a long way at this point because you are attacking these kind of polarized moments. If you go back here and this becomes the point you have to hit to break this move, right? So let's make this one a dash line. If this is the point, okay, we can delete this one. We can delete this one. If this is the point that has to break the move, you need to have this hit and you need to like almost go down immediately. There's not much left. You're either going to go straight up here or straight down. The only thing that maybe can hold this move would be, I would think, this level right here. So if this hits and you've got a hold level here, this is holding the move. I think this is happening very fast. So I think there's a lot of reason to say, I don't think you would have taken profits here personally. If I'm thinking about myself trading, I don't think you would have had profits there. You could have. I mean, if you're just looking to simply make 15% on this trade, sure, easily done. It happens probably within seconds. You probably have an instant touch here and almost like 10, 15 seconds you go down there. With that said, you also bounce this move, hard close over trend, and have a reasonable spot to get out because this thing looks like, again, it's just going to explode up, right? And then you're just going to your automatic level. So this is hyper TA, tons of decisions, okay with making 15, 20% on a trade, okay with making 25% here or 30% or whatever it ends up being. Okay with making 15% here. Lots of trades happening very quick. You could have even longed one of these to this level and taken the other side of it too and made a 50% there. So you could have had a 3 setup trade here. So 3 trades, 907 to 930. 3 trades in, is that right? That seems like so short of a time frame. Jesus. 932, we'll just say 937. So let's just round it up so we can make it equal numbers. 30 minutes, 3 trades, 1 trade every 10 minutes. Like, and that's fine. And if you nailed all 3 trades, you're lingering somewhere around 1%. And you know, these are not trades you're holding for a long time, but they're trades you're doing insane amounts of hyper analysis on. That's a nice little pullback. At least it gave you a spot to get out of the trade. That's decent, right? Like that's actually okay. You even got a little bit of a better exit. Actually pretty okay. But you know, you're still, if this can hold the move and you haven't even gotten to the second point that can hold the move, like if this is one of them and this is number 2, and I'm sure you even have another number 3 down here. If this is the number 4 is where you need to go at a minimum to break the move, like you're still holding strong. You haven't even hit 2 or 3. You've maybe, if you want to consider this 2, maybe you've started to float close to it. And then maybe you've created something here where if this continues to attack the move, and that's polarity, I could break it down to those lower levels. But again, that would even be so, if this is number 2, this would be like number 1.5, and you would still have to, you know, pull back, get underneath this, hard close that just to get to some of these lower levels. So this is just, it's not looking good for anybody who would be shorting this. Like it looks like you're about to crush up, and you get opportunities to leave this trade. So there's really no reason that you should really lose money on this trade. Like there really isn't. And so that's fine. And it goes up to your automatic level, right? You just hit play here and you'll see it go up or whatever. Pause. Yeah, well, okay, well, it gets really close anyways. That's fine. It gets super close and then pulls back right to that level that's going to break the move. So that's good. So this is telling you that the move is going to break in the future. You've already started to set it up. So you can just kind of let this thing run out, and then you have a bunch of decisions you can make here. You have some of these backside levels where you can start to take trades on right there. It's pretty close, but maybe you'd actually want to do proper TA here and just start from a 5-minute time frame. You got a 5-minute time frame right here. You got the whole level there. There you go. It's perfect. I'm not sure where this one comes from. Okay, it's just pretty internal, so that's fine. You've got a 5-minute level here. You hit that 5-minute break on the bottom. You can get rid of this. That's pretty reasonable. You hit this to there. You've got 0.25% of a trade. That's fine. This will break the move in the future. You know that the move is set up to break. You can make your decisions around that. You can start having trends, internal parts of the move. The whole point of this is to make constant, constant adjustments, constant trades based on this little section of information. Just hit play here. Let this thing work itself out a little bit. Yeah, and then you go to that next level, and then, you know, your at least your TA is kind of set here, right? Like you've got something like this. There might be a higher time frame here. We don't really need to go into it, but you've got this as polarity. It's going to break the move up, and then obviously you've got this here backside, develop this part of the move, and then you've got to break your internal pieces too, like this. So you just go forward a few candles. Tries to break it. Let's see where it goes. Yeah, it does break it. Now we can delete that. Trend loses here. That's fine. Ladders to here. Play, let this thing run out a bit. And just delete that one there. We don't need that one. Let's pause it there. Pretty simple stuff. I don't think I really need to point out, but anyways, hold level here. Ladders the move. Nice, easy trade. How do you manage that trade? And that's like a big part of decisions. You got 40% there. You wait for a little longer. You've got full 1% there. You've got your trend work here. And I'm sure there's other time frames we could be using, but for now, that's fine. You've got trend, confirms, go to the 15. You don't have a 15 there, so it's fine. That's a 5-minute trend. We can just mark that color. Mark that peach color, and then just hit play and just let this thing kind of go through, because all this stuff will be gone now at this point. And you've got your trend here, you've got your trend here. This is still cycling the move to here now. Oh. And again, a fairly simple trade, right? Like if this breaks a move and you haven't hit it yet, instead you've started to ladder off of this, you make a trend, that becomes a pretty easy trade. It becomes a pretty easy trade to get in here and say, if you don't get, let's take this and move it to here. If you don't get over top of this, you get out of your trade. If you have taken that trade from here to the top of this move, wherever that may be, hold level to hold level, you've got that to this one, that's tested. So you could just go to like right here. or even just right here. And that's the trade, right? That's a very simple, easy trade to make. It's 45%, great, right? It's 45% to there. You take the body or the backside of this. That's another easy trade to make. It's just should be just a very quick decision. You know, this is anywhere from 20 to 30%. Easy trade. You're laddering up the move. You're finding your spots that are just sitting here constantly laddering. There might be a backside here that it hits and holds. Looks like it's a backside. I would have probably used this. What's the price of this? 955, and this is 61. I don't know. In it or not really sure if I would have been in it or if I would have missed it. But again, it's like if you miss it, it's not a big deal. It's a quick little trade, right? What about this right here? What about on the top side of this chart? What do you have? Got this, which has been holding the move down. Let's move up a time frame. Let's see if we can find anything else. So you got this as an origin. So that'll break the move up. So that means you should be buying this 15-minute level, right? You hit that, you create that. This here will hit. I don't know if I like that. I might try to find something a little more important on the charts. I might look for something that would. At this point, I'd be using +1, -1. This holds the move up, so you kind of have to hit this here, right? So if you hit that and you ladder this, I would assume you're moving up. You ladder that. Oh, you didn't. Yeah, exactly. Right. Hit this, hold it. Okay, so actually goes up a little bit against you. Not much. What is that, like 20%? Not much. Goes up higher, goes close to trend. That would have been another easy decision trade right there. Whether you were in from here, right, and you never got stopped out, or you did to here. I don't even think you need to take the 80% here. I think you can even just go to this level for another 50%. And it's pretty straightforward. And there's just a ton of TA you're doing. It's constantly rolling, and you're just looking for these small trades. You're not looking to hold them for a long time. You're not looking to make anything out of them. You know, that's it. Simple. And even if you got in on trend and wanted to exit on the origin, it's another 1%. And I don't even think that's reasonable. I think it's reasonable to kind of say, like, go from here to trend again. And that's fine. At a minimum, this should have been a 50% here, and it should have been a 50% there. And they're very quick, easy trades. They're not, you know, you're not going crazy or going too over the top to find these, you know, miracle levels that are going to give you outstanding results and blah, 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 right? The same thing. Like you've got, what is this here? Is this hit? Yeah, that's hit there. So you just move up to this one. That's hit. And, oh, it actually goes for the reverse here too. And we're not, so this could be like, let's clear something up. This could be a different time frame completely. I'm just walking through these charts, showing off the examples of laddering and just the quickness of what this should be. You know, even this 15-minute level or this 5-minute level here, like, okay, come on, TradingView. Even this 5-minute level here, like you've got 30%. Oh, let's measure that properly. You've got 40%. And even if you took this just for even if you just took this right to here, you've got a 5-minute trade that's 35%. So call it 30 after fees, right? Like it's a 5-minute trade, 30%. This is exactly what you should be aiming for. You're not trying to turn this into an automatic where you're looking for 5 and 6% or 3%. Can it happen? Yes. Yeah, that's where you're going to be defining more like of your polarized parts of the charts, right? Like you're going to go down here and say, well, what kind of stuff can hit down here? Maybe this could ladder it a second time. You've got that. Like maybe you could reverse this one right here. 30,193. So maybe you could reverse that, therefore continuing this ladder. I think I would have to walk through the chart to see if this is an automatic or a decision. I'm not convinced it's an automatic. Maybe it's an automatic internal to this, but I think there's a decent trade there that might turn into, oh, actually it just hit perfectly. That's amazing. I think this is a good trade that might turn into an automatic, but you know, with this trade, you could have already been in it for 80%. Like Jesus. And if you're not out yet, you could be simply going to something like this right here. I think we might need to actually go down a time frame to find, because I feel like there should be something that's connecting this one here because of that. So like, I'm not going to find the level because I don't want to waste a bunch of time, but I feel like if I was to look, I would want to find something that hits this and I would want to ladder it off of that. So my total kind of like, if I was in this trade and I said, okay, my max kind of cap on this would be 1%. That's fine. If you've already made 80, but the payoff is 1.2, I don't know. I don't even know if it's worth it. So at that point, I wouldn't even take it because I wouldn't hold this trade to take 1.2 when I can take 80 right here, which is a ladder from here to here. I could take 80. If I'm staying in this trade, if I'm not taking the 80, I think I'm going to be looking for a much bigger level. I think I'm going to be looking for that broke the move down, which held it. So if we were going to move down still, and I'm saying like, I'm just going to move down and take those profits, I would go to there. So then I would turn this, I would take either 80 or I would take 1.8, which I think is reasonable. If you're gonna take that trade off for that level, you're pulling a full 1% out of it. Or you could even be, you know, up here somewhere. Like, let's go, we're on the 4 hour. So you could be here. Is there a 4 hour origin? That ladder's here to here. So you're up here. That's hit. Yeah, I would say that's hit. But at the same time, I would say this would be the origin that I would be looking for. And maybe even turn that level into an automatic. No, I don't think I would turn that into an automatic. What I think I would turn into an automatic is this 1 hour. This 1 hour I would turn into an automatic. This I would turn into a profit take. You are developing this here possibly as a 4 hour, which is huge. So that's going to be important CA wise. So then you have this to here, 3%. I think that's more reasonable to take if you're not taking 80% on this trade or 85% as that first pull. I don't think 1.18 or 1.2, I don't think the extra 30% is worth it. At that point, I'm either taking 0.8 or 2.8. I might be convinced to take 1.8 here if I see this as pulling back and developing timeframes where I'm going to say, okay, look, you've got an interior range there. It's hit this on a 15-minute candle 2 or 3 times now. It's just not breaking up. It's starting to just constantly hit this level. Okay, sure, that's fine. But that's a CA call. That's a call to do your comparative analysis in that moment and say, oh, 1.8, great, right? Like that's a good call for that. And if that doesn't happen, then you're simply exiting your trade here. And so that decision layer can turn into a longer time frame trade, but there's got to be a really good reason for it, which there is. You've hit an hourly level, it ladders here. It's just tried to break the move. So like, let's talk about the flow of logic here. This will break the move. And in order for it to become a point that can break the move, it has to create an origin first. So not only does it have to hit it first time here to create the break level on the hourly, then it has to hit it a second time to confirm it's an origin. If that does happen, the next question would be, can it ladder this? Because this would have created a floating level here. So this getting above this wick would say that you cannot go below this. So if you don't go below this, then what you have is you have the call to try to break the move from the bottom side. So the logic flow dictates that if you were to go over this, and then after going over top of it, you were then to ladder above this, you would have a call to move up in the move. So that would be the point where I say, okay, we also have a 4 hour here. If we now have confirmed that we broke over this part 1 to create a floating level, we floated that move to create the ladder point 2. And then if we get over top of the 4 hour, it's giving you all the confirmation you need to go up and attack this 4 hour here. Hold level, break, or possibly move up, or even just hit a hold level here and bounce between these hold levels. That's fine. It's just like a little micro Pandora's box. But there's a ton of CA to do in this. There's a ton of constant small trades. They're never quick. They're never automatics. Maybe if I could define one as an automatic, it would have been this because of all of the other exterior criteria. Floating level, over top of the wick, ladder the move to create that. So this is the final point that laddered that move, which means if we stay over this, it confirms that this broke this wick and the floating level is held and you've laddered and you've created the 4. Like, it's just a lot of confirmation. It's just the logic flow is sound to make you feel very comfortable in the trade, to give you everything you need. So like my next piece here is get over this. If I can't get over this, if I'm just sitting here doing this and creating hold levels underneath it and just laddering down like this, and you're creating kind of this slope like that, you just get out of your trade. It's fine. You know, you could have taken 0.8%. Instead, you got 0.4. No big deal. If you wanted to say, I am going to turn this trade from just like this small time frame decision moment into more of like the long time frame swing trade, position trade, fine, you can do that. And that's really like the big difference between automatics and decisions. You have points of polarity on automatics that give you kind of exacts, right? Like exactly this is going to be your polarity. You're going to take larger trades there, bigger leverage, longer time frame to be in them. And if not, it can be small time frame for big profit payoffs, quick 1 and 2%, sometimes even 3, with the intention to get back in the trade. This would have been an automatic in the moment for polarity in this move. And you can see how hard it drops. Like you can see how instantly it drops 5%. So this was actually a really sick automatic, but this was also something we talked about in mentorship, saying like this level has to get hit and then it's going to go and float above this. So we almost defined the top and bottom of this move in the previous mentorship lessons over the past couple times here, or last week. So this is a 5.3% move. And it was pretty straightforward because you have to, if you're at polarity, you have to create something that will break that polarity up. So you must create this. So this was always the level. This was like an instant trade, and it's just going to go and it's going to ladder this. So at a minimum, At a minimum, you have 5%. If it never laddered it and kept moving down, oh, that's sad. You exited 5% when maybe you could have made, 15 or 20. Like, oh, you could have made 12%. Instead, you made 5. No big deal. It's 2 hours, 5%. Like it's not crazy, but this became automatic. This became automatic. This internally would have been the only level, again, automatic. And this is the moment you need to get over. And then you can see where these are larger time frames, more waiting periods, larger time frame, more waiting period, bigger profits, more patience, less about the technicals because you're just simply marking 2 levels. You're not going in here and over hyper analyzing comparative analysis. You can, of course, to aid in those decisions, but it's not necessary as to where these decision moments, it's just constant, like take 30%, take 40%, take 50%. If you get 80, good. If you're not going to settle for that, then you're sitting here and going, okay, well, let me at least then go for a higher target, turn this into a swing trade. And that's really where you're going to be seeing like the power of automatics and polarity, automatic levels with automatic percentages that are polarity moments, and decisions, which are just going to be constant small profits that take a big stressor off of your trading style. And this is really like a great way to build an account too, because, automatic levels, they have their pullbacks 9 out of 10 times. It's going to be picture perfect. You make good amounts of money. There's not a lot of stressor because you know what to expect. And then same thing with decisions. Instead of just entering these trades, and I think this is like a big key component, instead of entering a trade, like, okay, first off, you could have just entered a trade right here and you don't really have any kind of defining criteria. You just enter your trade blindly and say, oh, yep, I've entered my trade. I'm just going to go for a percent, right? Oh, I've entered this, or I'm just going to go for like 80%. That wouldn't even make sense because if you go here, you're at 35%. If you break above this and you're looking for 80%, like 80 or 90%, at that point, you might as well be stretching for the higher level because this was the same outcome level. Like you could justify it here, but it was the same outcome level as this 1.8 here, I believe. I believe they're the exact same level. Like 1.8 was like right here. So like if you're not taking profits here, why would you take it here from here, right? You can, and it's a scalp, but I would, if you're going to take this trade, you're almost better off just doing this for 40%. Like that's actually a pretty sick trade, 40% that quick, like even right now, that's actually a sick trade. But a lot of times I think people enter these trades and they don't really know where to exit, and they just kind of use comparative analysis only in the moment to say like, oh, we've got to get over top of this in order to stay in this trade. But that wouldn't really make sense to just get over this. You would just take profits here because after this, you're up into this range up here. And I think this is a problem a lot of people have, is they don't have that definition of what they can expect from the trade, or at least a reasonable definition outside of just marking, oh, we hit a 15-minute level. Like what level was this? A 5-minute level? So like, is there a 15 here? Yeah, okay, there's a 15. I know there's not an hour. There's no way there can be an hourly here. Maybe no, there's no way. So then they would just go and they would say 15. Oh, it's automatically going to hit here. It already hit that 15. So it's automatically going to hit here, right? Like that's what a lot of TA people do. They just mark a 15 and say, oh, it's going to the next 15. Or if we go to the +1, -1, we could go to this 5. And if this hits, it's going to break the move, right? So you hit this, you go here. Now your decision is simply this 5-minute. And you really wouldn't want to have that 5-minute moment as a decision, because you're only getting an extra 8% in this move, when really you should just be exiting here. It's not about getting an 8%. It's about exiting here. You take your 15-minute, you exit here. And that's, I think, the way a lot of people trade. And beyond that, what they would do is they would just go and say, oh, let's just go for an hourly up here, right? Which sometimes can work. But again, it's just a very blind way of trading without a lot of clarity in the move, because then, you've got your 4-hour here and you get over that and this thing is going to pop, right? Like it's pretty straightforward. So those decisions, those small time frame decisions, they give you a lot of clarity in terms of what to do, and not just enter a trade on a level that looks good because it's laddering. This gives you an even more defined piece to define the expectations of the trade. And I think that's, again, where a lot of people struggle, is defining the expectations of the trade accurately. It's easy to enter, like, okay, fine, pick your 15-minute level. Oh my God, look, it's a great entry. Of course, but define the exit properly. Define the trade how it should be defined to the proper targets. I think that's where a lot of people struggle. They just mark a 15 and they're like, yeah, we're moving up. Yeah, maybe, but to where, right? And so like, it just gives you that clarity, and it gives you a lot more control on your trades.